Thanks for tuning in to Corcelli's 30-second morning market update. S&P futures are down 5 handles. Crude oil is up 0.4%. Natty gas is up 0.1%. Gold is down 0.1%. Dr. Copper is down 0.7. Coffee is down 0.07%. We have the three strongest commodities: sugar, coffee, and cotton. Let's take a peek at the charts really quick, see what tales those three charts tell. We're going to drag into this chart here, coffee, strong commodity. We're going to throw in sugar, strong commodity. We're going to throw in cotton, strong commodity. Anyway, keep your eye on those. Let's take a peek looking at European equities. European equities and how they're trading today. We have them up 0.25% all the way to down almost 0.8% right here. Can't believe that equities are down again today. It's actually very strong. They've been very strong lately, and we have Stockholm down 0.8. But anyway, being a macro top-down guy and looking at slowing macro data while all these equity indexes are creeping up, it's a painful exercise. That's why we couple bottom-up fundamental research into our model to offset some of the timing and triggering mechanisms that happen from time to time. I strive to get things right on both sides, but it doesn't always happen that way. Anyway, moving along, Asian equities, Japan down 1.88% last night. It looks like the Shanghai Composite was slightly green, up 0.25%. Moving along to sovereign bond yields all over the world. Sovereign bond yields are a mixed bag. It looks like in South Korea, New Zealand, Australia, the yields were higher, bond prices lower. Looks like Japan just crept by with slightly lower yields, higher bond prices. Greece, Switzerland, Portugal, Spain, Italy, and yeah, it looks like European sovereign bonds are flat to slightly down, with the exception being Greece and Switzerland, the pigs, basically. Top news out this morning. Stock slip as emerging markets bear brunt with crude below $40. HSBC climbs the most since April on $2.5 billion stock buyback plan. HSBC is going to spend $2.5 billion buying back its own stock, and that's also one of the reasons why the multiples have been pushed higher. We have very low corporate borrowing rates, so they're actually doing a lot of issuance of new debt, and they're taking that money and they're plowing it into buying their own stocks back. Paul Tudor Jones calls on quants to revamp firm hurt by losses. Actually, very similar to what we're actually doing here, but we weren't hurt by losses. But I think quantitative strategies right now are where it's at. We're actually working on artificial intelligence, neural network, machine learning program to start to predict the price of certain commodities. And then we're going to move that out into predicting stock indexes and stock prices. So anyway, I think that's about it for today. I hope you have a great day investing, as always, and tune in to see more live from Alexander Alternative Capital in Miami. Thank you very much, and I hope you have a great, great, great day.